Hello, this is Steve Malone with Comes Effects. Hope you're doing well today and getting some good trades. We've seen in the last couple of days some extraordinary movement in the Aussie dollar and in the New Zealand dollar since the FOMC announcement. We saw a great amount of strength in the dollar. Literally, the dollar index was at an 80.50 level, and as of today, we saw it break above the 82 level and fall back a bit. But however, we didn't see much retracement on the Aussie dollar and the New Zealand dollar, and that's what many traders were looking for today, was a bounce back up to a certain level and then to fade that back down and establish a floor to work off of. It hasn't happened. We got extension or continuation down on both the Aussie dollar and the New Zealand dollar. So some traders today asked me, how far do I think the Aussie dollar and the New Zealand dollar may go from here? So let's just simply take a look. We can see that we do have some divergence because we have this situation where we've had the lower lows coming across here. We've kind of flattened out, but in this case we have these higher lows coming across at the same time. So a bit of divergence there. I'm really not considering so much the divergence at this point. What I am looking at though is if the market continues to push up based on the Traders Dynamic Index, but price doesn't move, that's more akin to hidden divergence. Now if I take a look at this, you can see about a 400 pip move down, but if I simply go off the lows that we've had to the FOMC high that we had, there's a 23.6 retrace right about 92.50. Now looking at today, we have a high that back here off that FOMC situation that takes us back to a 93. So somewhere between 92.50 to 93 is a possibility of a bounce back up. And that's what many traders are looking for. They're looking for a bounce back up, then the fade, the rally back down to establish a floor. Now if you look at the weekly chart of the Aussie dollar, you can see that we broke this low, which was also this resistance high back here. So a pretty strong level at 93.85 has been broken, and simply going off the lows to the highs, the lows we had back in 2010 to the high that we had up here in July 2011, we came down to a 618, which is 92.26. Now where do we go from here? Well, there's a possibility of getting down to the 78.6, but that's a long way off. What I would much rather do is just consider a fib extension from swing high to swing low. So the last swing high is up here, and since we've already broken that swing low, notice that on this swing low the market's already pushed down to 127.2. See how it came right down to that with that candle, and now with this candle we've come right down to 141.4, sitting really at that fib extension of 91.66. Now we did break this level, so if the market continues to push down, I'm going to go out to that swing low and compare it to this swing high, and you can see that the 127.2 comes in at 90.60. So in effect, I'm looking for the market to push down to 90.60. It could possibly go down to 90, given the fact that there are some corporate bids down there, some pretty strong bids down there around the 90 level to buy it back up. So long story short, for the Aussie, look for continuation down to about 90.60, possibly down to 90. If not, then consider your intraday bounce back up from the FOMC high to today's low, putting us somewhere in the ballpark of a 92.50 to 93. Now take a look at the Kiwi or the New Zealand dollar. Again, we do our fibs from the FOMC high to the low that we've had today, and what we're looking at here is a 23.6 retrace of right below or right at 78, and then the 38.2 comes in right around 78.40 level. So I'm going to be looking for that as the market, again, the Traders Dynamic Index pushing to the upside here, but if the market baseline gets up to the 50 level, the green, the red kind of fade, and not really do much, and price kind of wanes a bit, then we come back down. Now it does show a bit of a double bottom here, but some weakness on the move to the upside. Again, overall, traders are looking for the rally up and to fade that rally. So again, mark about a 78 is where traders are looking at, possibly up as high as 78.40, 78.50 level. Looking at the weekly perspective, when you run from the low that we had back in 2012 to the high that we've experienced this year, up around that 86.75 level, you can see that as of today, we're right back down to a 78.6 retrace. That's a pretty strong retracement. A failure of that might see us come back down to about the 76.65, 76.50 area, which were the open and closes back here in 2012. So with that perspective, there is the possibility, as corporate bids in the Kiwi are building up between 76 and 75. So there's a possibility of getting down that far. It's going to be I'm not sure if it's going to go down that far or not, but that's a pretty strong retracement to see this. I've been surprised a bit by the amount of weakness seen in the Aussie dollar and the Kiwi dollar as of late. But if we have continued strength in the US dollar and we see that affecting the emerging market, Indonesia, China, well, in the wake of that, you have the Aussie and the New Zealand dollar in that mix, which could definitely see potential slide further down. So the lowest point I see right now in the Kiwi is somewhere between 76.50 and 75. That's about 150 pip range there. And for the Aussie dollar, how far down could it go? I'm looking at right now at about a base of 90.60 to the 90 level where corporate bids come at. I'm a little bit leery if it's going to go all the way down to 88 at this point. I think somewhere in this ballpark between the 90 level, 90.60 maybe, then up to about the 92 where we're currently at. That's an area where the market's going to start considering maybe a bounce and a push back up. We'll just have to wait and see. So those are my thoughts going into tomorrow, seeing the Kiwi maybe settling out and the Aussie dollar also settling out, trying to establish a floor. Look for some retracement up, but I think traders in the big scheme of things are still looking at short potential in both the Aussie dollar and the Kiwi dollar. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.